I'm joined today by Brad Bauer, Chief Executive Officer of Värde Partners. Brad is among the incredible investors sharing insights at the Private Credit Investment Forum today. Welcome, Brad. It's great to have you with us.
Nice to be here. Thanks for having me.
Let's dive straight in. What is your long-term outlook for private credit, and how do you see the industry evolving?
Oh, it's a big question. The long-term outlook, I think, structural trends have been playing out for decades now. And those structural trends obviously changed through time, and more recently, we spoke about it earlier today, the trends in asset-based finance and a few other markets have taken center stage, maybe away from the direct lending trends that have been driving much of the private credit allocations over the course of the last, call it 10, 15 years post GFC. So look, I think, private credit is poised to grow materially. I think the market share garnered by private credit in the direct lending space will probably ebb a little bit, and it'll grow probably more in line with the market as a whole. Asset-based as maybe an alternative, I think it's poised to grow disproportionate to the market.
And how can LPs diversify their private credit exposure?
Well, that is a very specific question that's unique to each investor. We talked to some investors who are very new to private credit, believe it or not, even at this point in time. For those investors, I'd say, they have a blank slate, which makes it a lot easier to diversify and pick your spots. I think, in the context of a blank slate coming into the market, I'd say, your core portfolio should not just be direct lending. Direct lending obviously is naturally going to be a big part of it, but I think you wouldn't say that's the be all end all. For those that have more mature portfolios, it's a little bit tricky to move your portfolio in a material way over the course of a short period of time. So I think we see a lot of those investors working their way into other parts of the market, looking mostly at diversification benefits, I'd say, as a starter. And I think, you have to make some choices on what really you're trying to accomplish at the portfolio level. We're obviously one manager as a part of a broader portfolio, so our position will vary depending on the sizing and their objectives.
And where do you see the most attractive investment opportunities across regions?
Today, as we sit here, I would say the U.S. has been a great source of opportunity. The banking sector and what's been going on in the U.S. with regard to the Basel Endgame has driven a lot of, I'd say, change in the market. The role of insurance in the U.S. has changed materially over the course of the last few years. Now, in recent month, with tariffs and deglobalization, which is not a new thing, but that acceleration of the trend, I'd say we're starting to see some interesting opportunities arise in parts of the market where we don't have quite the same macro questions lingering. I'd say Asia is an interesting market that doesn't get a lot of attention. Asia Pacific, I should say, doesn't get as much attention in the global scheme, I think, but credit is growing quickly. Markets are growing fast. The demand for credit and the usage of credit has changed quite a lot. And there are a number of credit systems that actually operate really, really effectively. Australia would be one. I think India is an interesting example of a market that has changed massively in the way creditor rights have evolved. And I'd say for the most part, it's been a good direction and does not represent a material portion of any LP's real private credit exposure. So I think there's some interesting things happening in Asia that don't necessarily get the headlines.
And where do you see the opportunity in real estate credit, and why do you think that's attractive?
Opportunity in real estate credit is fascinating because what's gone on in real estate overall. It's in the sectors, office gets a lot of the attention, but valuations have changed materially over the course of the last couple of years, so that we're in a cycle, in a sense, in a way that you haven't seen it in corporate credit. So rebased valuations, lending against those rebased valuations, oftentimes in newer assets that they may have a lease up, they may have a little bit of occupancy to grow. So we find the most interesting situation in first lien lending, bridge and transitional mostly, as opposed to stabilized and core, where you take some different risk. And the premium we see relative to what you can create in traded markets, either through CMBS, like that maybe mezzanine tranches of CMBS, or any kind of liquid version, you certainly get a material premium. And I think it benefits from some of the same trends that we've talked about with ABF and direct lending. Banks are operating in a fundamentally different way. Insurance companies play a role, but not really in the commercial real estate market in the lending side, because they're so focused on core and unlevered core. So we're finding some really fascinating opportunities, and we think in some cases we're actually, as the senior lender with a bit of leverage, able to produce a better return, a higher return, believe it or not, than certainly the pref or the mezz that sits behind us, and in some cases even the equity.
What are the key success factors when investing in private credit strategies?
I think it has to start with underwriting and structuring. Experience is obviously a component of that. Some of it's discipline, some of it's lessons learned. A lot of focus tends to be around origination and what is your edge in origination. Definitively, that's an important piece of any private credit strategy, but it ultimately, in credit, I don't care what sort of credit you're talking about, if the underwriting isn't there, if the discipline isn't there, and the structuring isn't there, things go wrong quickly.
Fantastic. Thank you so much, Brad. We're actually going to need to leave it there and get back to the forum. I really appreciate you sharing your expertise with us today and for being a part of Global Investment Institute's Private Credit Investment Forum.